This is Chip Maxwell, and you're listening to the Retire Smart podcast with David Brooks. Markets are making headlines as volatility shakes investors, with the Dow tumbling nearly 900 points and recession fears on the rise. What's really happening beneath the surface? Join us as we break down the noise, analyze key economic indicators, and explore strategies to navigate the uncertainty. Let's get into the news. Well, the markets. Here's a CNBC headline. Dow tumbles nearly 900 points. NASDAQ suffers worst day since 2022 as recession fears erupt. Even one of my kids, David, sent me a TikTok of the Chicken Little sky is falling. Trump's going to crash the markets and create a recession. Sort it out for us, David.
Well, I mean, the markets have been overvalued. We've been talking about this for a long time. So you're just using the tariffs as the excuse. The markets are always looking for an excuse to actually get things priced correctly. So we've had a drawdown. We've now hit over 10% and almost 20% on the NASDAQ on the little bit higher flyer stuff. But this is normal, right? Corrections are normal, and we've gone a while since we've had corrections. And since that article, the 900-point down day, we had a 700 down day. We've had some pretty volatile swings as well. And so we actually sent a video out earlier this week to our clients, just kind of letting them know, hey, look, this is normal. This is what happens. This is how we're protecting you. This is the proactive part of our portfolios. And we just think people need to just calm down. If the white noise out there is spooking you, then you're probably not invested correctly, or you probably don't own the right stuff. And like I said, if you're losing sleep, you definitely don't own the right stuff. And so are you working with somebody who helps you understand how to allocate your assets in an appropriate manner? And the problem we find is with the do-it-yourself crowd is often they will pick the high flyers and then run them and then never let go. And so when they come back to earth, it's a little bit humbling for them, and they get into this mental state of they can't make a decision, and no decision is a decision, and sometimes that costs people significant sums of money. So anyway, just be prepared, have a plan, and that's why we recommend working with a professional.
Well, the Treasury Secretary, Scott Bessent, told CNBC there could be what he called a detox period for the economy. And President Trump himself is quoted in this story, "What I have to do is build a strong country. You can't really watch the stock market," which I think is similar to what you just said.
Yeah, and so what they're trying to do is and they've put other comments out there, and I'm paraphrasing, it won't really be our economy for 6 to 12 months. In other words, they're trying to get some excuses out of the way so they can't own the drawdown that's going to happen in the markets. And again, the market could, and we're not saying it will, but it could go twice as far down as we are now. It could easily go another 10 or 15%, and we'd still just be fairly valued by most valuation metrics. So again, we're watching some key levels. Now we had some data come out this week. CPI, Consumer Price Index, came out on Wednesday morning, and that was lower than expected. But it's exactly where I told you it would be here. And we talked about this last month, how it was hotter than expected last month, and this month you'd see that retracement. And we think you're going even lower next month. And that's not what the Wall Street or the talking heads are talking about. And I'm like, I just wonder, do you guys not know how to read data? The formula is on the website, how they calculate it, and yet I have all the same data at my fingertips as they do. So why do these talking heads miss so badly? In fact, you had Steve Leisman on CNBC, one of their normal commentators, called Trump crazy yesterday or Tuesday of this week. It was literally, I might get fired for this. I'm crazy, and yet he completely thought inflation would be at 3.1 to 3.2 this time. So I'm like, he's either a terribly trained economist or he has an agenda. And imagine that, somebody on TV with an agenda. But anyway, the point being, don't let the white noise freak you out. I just talked about it. You've got to have a plan and how to understand how to take advantage of these opportunities, because you can rebalance your portfolio when you get a drawdown, and you can also take advantage by, in other words, if the market gets down 15 or 20%, we will start aggressively accelerating Roth conversions for some clients, things that we do, because we're able to pay even less tax than we would have doing it in the normal course of things. So there is opportunity in every crisis.
Well, speaking of economic indicators, you mentioned CPI at 2.8%. Let's keep riding CNBC here for another headline. U.S. payroll growth totals 151,000 in February, less than expected. Now, we had a precursor last week, and you even noted then, and even of that somewhat anemic number, about half is government jobs rather than all private sector.
And that's still hiring from the old administration. A lot of the back, they kept hiring and hiring and hiring. And so now you're seeing that go the other way. And the jobs number you get next month will not be pretty. We had the largest job cuts all the way back to 2009 in a single month in February in the private sector, let alone all the job cuts from the federal government. Now, all those federal government job cuts, Chip, will not show up in every report. Some of them will not show up till October's job number because these people are being paid severance, most of them through
they're still
September.
On the payroll.
So they're on the payroll through the fiscal year.
So it's still
year,
a line item
right?
in the budget.
So we may not see the full effect of the unemployment numbers well into the late fall.
All right. Hey, you referenced tariffs before because Trump's critics are saying, he's going to crash the economy with tariffs and a trade war and so forth. Now, there was one voice that emerged in the last week that is happy to hear talk of tariffs. A Fox Business headline, UAW leader touts Trump's Canada-Mexico tariffs as effort to stop the bleeding of U.S. jobs. Now, UAW endorsed Biden and then Harris in the recent presidential campaign, but now the United Auto Workers are saying, we actually like this tariff talk.
Well, yeah, because it would make it more beneficial to manufacture the said vehicle here in the U.S. Now, you need to understand, is the big three, Ford and GM in particular, they have massive assembly plants just across the river there from Detroit, right, in Canada. And several of these vehicles have partial assemblies of the chassis in one country and move across the border and get other parts and components added to it and then come back. And I don't remember which one. It was one of the SUVs, 13 trips across the border before completion.
That doesn't sound very efficient.
That's what I'm thinking. I'm like, how is this efficient? But it was the labor costs and the input costs and the tariffs. So what Trump is trying to do is, hey, look, move those jobs here. That'd be an American job, which is his job, right? He's to answer to the American citizenry. So move those jobs here and keep them here. And so the idea of tariffs is to make it more advantageous for a manufacturer, so if somebody's creating a product, to decide to create or invest that product here. Now, the reality is there is cost to do this. There is time. You can't just build a steel foundry or a plant to manufacture light bulbs or car parts or whatever it is overnight. So what the business community, and Trump had a business roundtable this week, and we don't have the outcome of that as of this recording, but what the business community wants, I've always talked about, is we just want certainty when it comes to tax policy, to regulation, to tariffs. And right now, the one part that's driving even me nuts with, we're going to double the tariff to 50%. 2 hours later, no, it's only 25. Oh, it's going to be 10, but we're going to exclude 6 products, but we're not, that is pretty hard to do business.
Or we're going to delay it and then see if you meet whatever my demand is.
And so from that regard, I'm already like, come on, man, just pick your policy and run with it. Now, tariffs are not necessarily a bad thing. Again, it's how we funded our government. 75% of our funding came from 1870 to 1912 from tariffs. And people need to learn history and understand what the job is. And again, we need to have a whole nother discussion on what is the job of the federal government, because obviously a lot of people think it's supposed to do a lot of things. It's not.
Thank you for listening to the Retire Smart podcast with David Brooks. If you want to learn how to generate lifetime income, reduce your tax bill, and maintain your lifestyle in retirement, visit retiresmartpodcast.com. And make sure to subscribe to keep up with new episodes every week.